It was September 1929. Imagine a businessman in Manhattan. He sees stocks soaring. He feels the intoxicating wave of optimism in the air. But deep down, a nagging feeling tells him something is terribly wrong. He senses danger. So one morning, he walks into his bank and does the unthinkable. He withdraws every single dollar he has, in cash. Just 2 days later, the market collapses. Banks fail, fortunes evaporate, and lives are utterly destroyed. But he survived. Why? Because he trusted his gut and acted early. Now, fast forward. Picture yourself in 2026. You get that same feeling. You sense danger in the markets. You see the cracks forming. You log into your online bank account. You go to your brokerage app, and you try to withdraw your money. But this time, you can't. The button doesn't work. The system flashes an error message. A message that says, pending. Your wealth, your life savings, are trapped behind digital walls. This isn't some far-fetched fantasy. This is the stark reality of modern finance. And it's why the next financial crash won't just destroy wealth. It will lock it in place while you watch helplessly as it disappears. Let's go back to 1929 for a moment. Money was simple. It was tangible. You owned your savings physically. You held cash in your hand. You had stock certificates tucked away safely in your drawer. If you saw danger on the horizon, you could act. You could walk to the bank, withdraw your money, sell your shares, and find shelter from the storm. Today, it's a completely different world. Everything you own, your stocks, your savings, your retirement funds, exists as a string of code inside vast interconnected digital systems. And these systems aren't just for convenience. They have locks, they have built-in delays, and they have penalties that are specifically designed to activate the moment panic begins to spread. Think about your retirement account, your 401k. Trillions of dollars are held in these accounts, but can you actually access that money when you need it most? Not without a fight. If you try to touch it before retirement age, you could lose up to 40% in taxes and penalties right off the top. Even a standard withdrawal isn't instant. It can take 7 to 10 business days. But during a real crisis, those withdrawals can be frozen completely by law. The banks have evolved too, not to protect you, but to protect themselves from you. Just try withdrawing more than $10,000 in cash. See what happens. Reports are automatically filed with the government. Delays are triggered. Your own account can even be flagged as suspicious, simply for trying to access your own money. Daily ATM limits mean your savings are rationed back to you in tiny increments. It's your money, but you have to ask permission to use it. And in the investment world, liquidity, the ability to sell an asset for cash, vanishes precisely when you need it most. We saw a preview of this in March 2020. Exchange-traded funds, or ETFs, were trading at prices up to 20% below the actual value of the assets they held. That means sellers were forced to take a huge loss just to get out. Mutual funds have a secret weapon. They can legally freeze all withdrawals. Real estate funds can suspend redemptions not for days, not for weeks, but for years. Your money is yours, until everyone else wants theirs at the same time. Then, it's the system's money. You might be wondering, how did we get here? How did we build a system that traps us? The truth is, these traps were built slowly, over decades, often disguised as reforms, meant to prevent the very bank runs we saw in 1929. The creation of the FDIC, the popularization of 401ks, the rules governing mutual funds, each step was designed to make the system appear more stable by systematically removing your ability to exit quickly. They built a beautiful modern prison and convinced you it was a fortress. But what happens when the real risk isn't a panic from the outside, but a failure from within the system itself? The warning signs are flashing right now, for anyone willing to look. Corporate insiders, the CEOs, the executives, the people who know their companies best, are selling their own stock at record levels. They're quietly heading for the exits. Sovereign wealth funds, the giant pools of money that manage entire nations' wealth, are shifting their assets away from stocks and into gold and short-term bonds. They're preparing for a storm. Even the very backbone of global finance, the U.S. Treasury market, is showing signs of extreme stress. Liquidity is breaking down. This is the market that everything else depends on. When it sputters, the entire global financial engine is at risk of seizing. Meanwhile, what are you being told? Stay the course. Keep investing. Don't worry, it's just a little volatility. These are the same soothing lies told just before every major crash in history. They were told in 1929. They were told in 2000, before the dot-com bubble burst. They were told in 2008, before the housing market imploded. But this time, it's different. Not because the system is safer, but because the exits have been sealed. In 1929, the people who acted early could walk out of the bank with their life savings in cold, hard cash. They could protect themselves. In 2026, when the crisis hits, you'll be staring at your phone, furiously tapping the withdraw button, only to see a loading screen that never ends. And by the time the system finally responds, the value in your account could be cut in half or be gone completely. History doesn't repeat itself, but as the saying goes, it certainly rhymes. The crash of 1929 destroyed fortunes because people chose to ignore the clear warning signs. The next crash will be so much worse because even those who see it coming will find themselves unable to escape. The digital gates will slam shut, but you still have a choice. You still have time to act. You can start by shifting your new savings into accounts that are truly accessible with fewer restrictions. You can reevaluate your exposure to complex financial products and systems that punish you for trying to protect your own capital. Most importantly, you can start paying attention to what the insiders are doing, not just what they are saying. Because when the next collapse hits, you won't have days or even minutes to make a decision. You will have seconds before the digital gates lock you in. So the question is simple, and you need to ask yourself right now. When the system finally fails, will you be one of the millions trapped inside, or will you be standing safely on the outside, having prepared before it was too late? The choice is yours. Thank you for watching. If this video made you think, please consider liking it and subscribing to the channel for more content that challenges the conventional wisdom. Stay safe and stay informed.